Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday. It is the 4th of April. A little more bullish activity than bearish activity today, but really kind of a flat day. We did, however, see the Dow Jones break through resistance today, so bulls definitely still got a little in them, if nothing else. And good afternoon to you, Thiago, Lorena, Nicholas. Always great to see you. Hope you had a great day both in and out of the market. Hey, Tanner, good to see you, my friend. On the earnings front, really nothing to report tomorrow. A handful of small cap companies are reporting, but nothing really on the big notable name front. We do have the jobs report coming out tomorrow, so we want to keep an eye on that. That may impact what kind of a day we have tomorrow. Really had a back and forth day today in the S&P. Here's our opening candle, and very quickly it just started to drift to the downside about midday. Let's not sell off just yet. Rallying back up, closing at a nice little doji type of a candle with maybe a little more upward movement than we've seen these last couple of days, right above that resistance level. So we continue to see good bullish willingness to buy. We are continuing to hold the break on the S&P 500, which I think is a positive sign going forward. We are moving into a Friday tomorrow, so we'll have to see if it's another dull day, we see some profit taking, or we want to run it. Really, honestly, I think it could go either way. I know I'm thinking about profit taking going into Friday, especially in some of those areas. Saw some back and forth in tech. We saw some really good movement in materials and in discretionary. So it's at least it's in my head. Profit taking on a Friday, I'm not opposed to it. And then we'll see if the market is or not after that jobs report. Maybe that can be the spark one way or the other for the short term. Longer term, I'm looking at this as an absolutely a good sign, closing above resistance for 3 days in a row. Arguably 4, depending if you call Tuesday a break or not. I'm not calling it that. But certainly the last 3 days, I think we can say that. And hey, Lloyd, hey, Scott, hello, Whitney. Good to see you guys. Hope you're doing well. I hope it was a good day in the market for you. So just kind of keep an eye on how we respond to that report. Everything technically is looking pretty solid, a little sideways on the intraday, but that's about as far as we can go, I think. We did see a lot of movement in the NASDAQ here today. Was selling off as some of those stocks, of course, as you guys all know, fairly extended. We've had a really good run in tech in general, started to see some profit taking, but by the end of the day, at some point we were down about 0.7% on the NASDAQ. By the end of the day, had crawled back to almost even, a nice big doji here. Still not going to be terribly surprised if we see some profit taking over in this sector. In the tech sector overall, and the NASDAQ in particular. There's profits to be protected, and whether or not we should or will, I guess kind of an individual decision that we have to make. But I think it probably is in the back of all of our minds. Do we want to lock in some profits and wait for a pullback? There's still little room, but we're knocking on the door of 76. Not a huge chunk of resistance, but certainly a round number that we want to keep in our eyes on. Not a lot of resistance though until we get closer to 77. So I could understand the profit taking argument. You'll never have to convince me too much about why you want to take a profit. I could also understand folks that say, hey, we still have room to run, Frank. Why take profits here? So I think a lot of that will come down to probably your personality as a trader. Probably the most interesting index chart here today, in my mind at least, is the Dow. We've been knocking on the door of that resistance zone all week long, finally pushing through. And we were, as we saw some back and forth in the NASDAQ and in the S&P, if you look at the movement today on the Dow, we really closed towards the very top of the range, tried to break out the last 15 minutes of the day. So we really had the bulls in control, very strong throughout the day, looking like they were believing in that breakout. Definitely going to call that a nice signal. I understand that it's just one day, but it always starts with one day, right? And a lot of times when we break these clear levels of resistance, it's a very easy thing to do for traders to want to buy. We saw that happen very quickly, this week in the material sector. It doesn't always play out that way. I wish it did, but it certainly can. So I think this is a nice development for the bulls. Don't really have a lot of resistance, as far as anything until we approach these highs up here in that 26.8. I expect going into next week in the market to be continuing to have a bullish posture, really, and regardless of what happens tomorrow. I would rather it doesn't have the Friday of 2 weeks ago where we had all the profit taking in one day and then half a week of indecision. But we'll see if it listens to me. I don't expect that by any means, but we will see where it goes. We are extended in a lot of areas, but the nice thing is some areas aren't. The Dow is just broke out. That's not extended. The NASDAQ, yeah, I think you could make a case that it is. Little more strength in the Russell today too. Not that really makes me all that interested. As you guys know, we still haven't broke resistance. And even if we do, that 200 is at least a moderate level of potential resistance in my mind. 16 continues to be the number. So if we are going to continue to run, for me at least, it's going to have to be in other areas. I have to tip my hat to the rut. It definitely looked like it could have wanted to waver a little bit, and really we saw a lot of resiliency over in the market as a whole and in the Russell in particular. But still, for me, more on the neutral side than the bullish side. And really, as you guys know, for me, that's really not changing until we clear this 1600, at least with the way the chart is built here today. So, really nice development in the Dow Jones, really good resiliency in the NASDAQ. We were selling. It wasn't a dramatic day by any means, but we were selling, and traders said, hey, this is a strong area. We're not letting it get too far away, buying it back up pretty happily. Probably the biggest winner today is going to be our material sector. Yesterday, of course, ran right into that old 5750 support zone. Used that as a place to take some profits. Today, it said that doesn't scare me at all. Pushing right through it, much like the Dow, very strong kind of from beginning to end on the trading day. A lot of strength going on in this sector right now. Continues to be, of course, a lot of bulls are calling this, if not their favorite, one of their favorite sectors. We are starting to fly a little further away from home than I would like. And all I mean by that is, we're pretty extended. We basically went straight up from Thursday to Thursday here. Nice bounce off of support, taking out major, I would say significant resistance, if not major resistance, if we want to nitpick here, the other day. Pushing through it, probably safe to say not as strong as, at least historically, as a resistance zone, but definitely there, pushing right through it. We're well above all of our moving averages. I kind of tend to think in these upward moves or downward moves, if we're going the other way, kind of the 9 EMA is home, so if it pulls back into that, that would, make sense. Now, that's not what my expectations are, certainly not tomorrow by any means, but we are getting a little bit extended in a very strong sector right now. No two ways about it. Definitely the big winner on the day. No real reason not to continue to be bullish in my mind. Does that necessarily mean great new entries tomorrow? Across the board, I don't think so. Right or wrong, I think a little bit of a consolidation, even a little bit of a pullback for new opportunities would be probably preferable for me. For existing opportunities, well, we don't need a pullback, right? You're in or you're not, and we'll talk later. So just continues to be very strong, no doubt about it. That support definitely that hanging at support, I think, really sold traders on it, because it danced around that the first half of last week as folks were, do we trust it, do we not? Definitely seems like, at least for right now, folks were trusting it. On the other side of it, just like yesterday, we still find ourselves in the trading range. Had a little bit of a bounce back day in energy, but really not anything to change. Nothing, at least in my mind. We are still very much stuck in the range. This is one of those areas that just, until we get some clarity, I think we have to operate with caution from a directional perspective. There are charts out there that you could arguably be bearish on. There are charts out there that you could arguably be bullish on within this sector. Really, to me, it doesn't matter either way. As long as we're in this range, I'm going to keep treating it like that. And one day, I look forward to saying something else to you guys, and you might be doing things differently, and I understand that. But for me, just another boring day over in energy. Been a good place from a cash flow perspective, from a directional perspective. not great. Not a lot of great setups, not a lot of great follow through on good looking setups. You have one good day, a break of resistance, but give it all back the next, because we're just stuck. We are just stuck in the range in that energy sector right now. Over in financials, smacking into that 200 yet again here today. We did push our nose above it on the intraday. We're not able to hold that. I'm not looking at that as a brick wall as far as resistance goes. It is a concern, and I'm not loving the financials right now. I am definitely tipping my hat to the strength that we've seen. Now we're starting to see those regional banks work into those old support levels. So we are not maybe out of the woods just yet, but we certainly bounced back strong from last week's break. A lot of things were ugly. A lot of them bigger banks have worked their way back into their ranges. I think in my mind, at least, very clearly back into at least neutrality. I'm not ready to say that on the regional banks. If they're going to, continue to just rebound, they're going to do it without me. But I do have to tip my hat. We've seen some resiliency within this sector as well. Still, I think there's a lot better areas, a lot more defined areas that have a clear, we are in control from a bullish point of view. And I'm not quite so sold on the financials myself. So, hey, Patricia, great to see you. I hope you are doing well. So I'm going to continue to take a cautious approach to things within the sector. The regional banks are still on the bear or bust list for me. They're starting to look more like bust. We got a couple of days. We saw some things start to move. A lot of them will look like BBT here. And so, this could be a kiss goodbye. And so I'm not opposed still from a bearish point of view in the regional banks, but they showed a lot more strength this week than, quite honestly, I was expecting them to do so. Now, I know we had a really strong week in the market, and certainly that didn't hurt them by any means, but we had lots of opportunities in the market. We didn't have to choose regional banks. I never would have chose the regional banks, and I know I'm just one person, but I'm never buying into this. So I still think there's potential bearish opportunity that could develop with these regional banks. So I'll continue to be very cautious with them in particular. Little, lukewarm maybe on the financial sector. I'm going to need to see it develop, some clarity before I get too excited. Over on industrials, such an easier read. If we can push through this resistance, we continue to smack our head into that 77, as we kind of thought was a reasonable chance that we would do that. A breakthrough here is just such a more, in my mind, clearer signal than what we're seeing over in the financials. And I always at least like to think I want to go with the path of least resistance. If you're confusing me or being misbehaving a little bit, you know me, I'll put you in timeout. Industrials, really nice run, continuing to battle that. So nothing really has changed, in my opinion, on the industrial sector. Maybe some nice breakouts for us next week if we want to push through that 77. Continues to be a pretty major level for it. A nice run. Of course, a lot of it came in the form of that big gap up, of course. But hey, we're here, right? Regardless of how we got here. Holding up well. Clearly an area that could be, looked at as a profit-taking zone, and at least for the last few trading days, really holding up well at that approximately 77. That is a big deal in my mind. A break above that is, in fact, a very good signal for more bullish activity within this sector overall. Until we see that, I'm going to kind of continue with the status quo. Yeah, I'm still on the bullish side, but really would like to see it at this point push through that resistance. Much like the NASDAQ, we saw the dip early, on tech, as profit taking was clearly going on here early in the trading day. Really nice bounce back, though, off of the intraday lows. And again, we see this a lot, especially when it first starts to happen, where an area is strong and it doesn't take much to get those intraday traders to say, I'm buying, right? Really pretty bearish as the day got going, but we hit that low and then boom, buyers right back in. It continues to be a very strong area. Whether we're specifically talking about new trades tomorrow, I'm not, generally, I'm not opposed to trading on a Friday, but generally I'd rather it just go by uneventfully tomorrow and reset for next week. We'll see if that's what we get. But I mean, clearly still above everything, knocking on the door of that all-time high on the ETF. So many of these tech stocks are either knocking on their own highs or pushing through. We saw, Micron gap down on a downgrade today, and we've seen those downgrades, especially in the short term, can really cause some stress to traders. But in the case of Micron here today, downgraded by Morgan Stanley, pretty big gap off of yesterday's close, and then folks are just buying right back into it. Right now, it really looks like traders are willing to believe in technology, even when maybe they shouldn't. I don't know if they should or should not have, but I wouldn't have dared buy Micron on today's open by any means. But clearly, I was not. I didn't represent everybody, so continues to be very strong overall. Little consolidation, little pullback for new entries, probably ideal at this point in time. We'll see if that's what we get going into it. When we start to get extended like this, looking for new entries can become a little more difficult. Not that we know that it can continue to go up, but we feel a lot of times a little uncomfortable. We don't want to buy it this high. If we consolidate for a few days, well then, then it's a breakout. Then it's a good idea to buy it that high. So we'll see how this one goes. Everything's still very bullish in my opinion. You could argue that we're seeing a little bit of weakness, on those short-term trends. But even at that, I think that's a little bit of a stretch and hard to make much of a case beyond anything intraday from a bearish perspective. Started to see a little movement back into the staples here today. A little bit of a rebound in those tobacco stocks. WBA continues to just, not do their job. Unless you're a bear, then they're doing their job exactly the way you want them to. So I saw a little bit of buying come back into this. Looks a lot like a retracement to me, developing into tomorrow or early next week. I don't think, for me, again, you guys know I'm fairly on the conservative side, so I'm not quite sold that it's a confirmation here today, but definitely a good first step. If we can continue this movement, I will be looking at this as a retracement area, and I couldn't fault anybody for looking at today's candle as a potential confirmation candle. Nice upward trend back in those moving averages. So many of these things are very attractive looking, have some room to run or new highs on a fairly regular basis. If and when we get the signal that we're looking for a retracement, keep in mind that we do have some pretty respectable overhead in this 56.50 to 57 range. That is our high point on this ETF for the last little while, as you can see. So we will have a little bit of potential resistance ahead of us, but it looks a lot to me like a decent looking retracement. And good afternoon to you, John. I hope you are doing well, my friend. On the other side of it, I think it's probably, for me, time to go a little more into neutrality on the utility sector than pullback, which of course I was looking for early this week, and I'm still not going to be surprised if we get, but it's retraced a little deeper than I would like to have seen it retrace. Traders have, and maybe it's just the type of environment we've been in, a lot of strong bullish activity this week in more aggressive sectors. So who wants to buy utilities on a week when discretionary and materials and technology and industrials are running? I get that. Just the way it's developed on the chart concerns me a little bit from a bullish point of view. Now, I don't mean I'm bearish, and by rule, I couldn't be until we break 57, which is our major support level. Little neutrality wouldn't necessarily be a bad thing within this sector, and then taking another run, but a little bit deeper on the pullback than I'd like, a little more volatility. We are seeing buyers willing to come off of the intraday lows very regularly. So it appears that there is still believers, and make me make a choice, and I have to do something. I'd still go to the bullish side. If I had to make a trade tomorrow on the utilities leading into the next week or so, I think I'd have a higher probability of being right than if I took the other side. But of course, I don't have to do that. Seeing a little turnover in the averages, a close, several closes below that 9. At the very least, I need to see this close back above that 9 EMA before I'm starting to think pullback opportunities are starting to materialize in this sector. And that can and potentially will be true as long as we're above 57. Below 57 would concern me, but we have to test 57 before we go below it. That should be a strong level. Trends for the most part are still intact. We haven't broke a lot of previous swing lows, just a little deeper of a retracement, a little less behaved than I would have liked to have seen, especially with the overall strength that we've seen in the sector. So maybe this is one of those sectors that needs to churn a little bit for another week before we get going. that would maybe be nice to see. We'll see. It'll probably just have a great day tomorrow because I'm kind of off of the pullback train. So tomorrow we'll have a big green candle up to 58.50, right? That's usually how it goes. But I'm going to be a little cautious though on those retracement opportunities that are still out there. At least some of them, I believe, in the utility sector. Healthcare just continues to be a back and forth mess. I have a hard time understanding how, whatever side you're arguing on, I have a hard time understanding why you're choosing the healthcare sector. Not that I think a lot of people aren't. There's, not everybody agrees on the sector, but most traders I talk to, they're kind of the same school of thought. Yeah, healthcare is in a kind of sideways back and forth. A lot of divergence in the companies, things breaking support, things looking questionable. Yeah, there are some upward trends, but even some of the upward trends are looking a little weaker. You see something like ABT that's been in such a well-behaved trend, since we really broke out of resistance. Not really done anything wrong per se, but not a very good looking pullback anymore, right? At least today, and that can change 2 days from now. A little doji tomorrow, a little upward movement on Monday. I'm saying, hey, look how pretty ABT looks. I understand that. But right now, we're not seeing, we were seeing earlier in the month that on these nice trending, in particular the trendings, the Mercks, the Abbotts, things like that, people were just willing to buy regardless of what was happening in the sector. Just continues to be a very hard read. I don't even know if I should dislike it more. I just don't really feel like it's a very easy to read sector right now within a larger range, overall on the ETF. So for me, again, much like the last little while, still very cautious, not opposed to individual components, but honestly looking elsewhere for the most part. It would have to be a really good looking chart with a really good risk to reward for it to get me too excited. Give me, I look at discretionary, how well behaved they've been. That's what makes me happy as a trader. And we'll talk crude here in just a second. John, we'll look Exxon as well when we get there. Just a great day. Behind materials here today, as far as top gainers on the day. Again, you can see this big green body candle. So a lot of good movement. You saw a lot of the brick and mortar type of stores show great upward movement today. The TJ Maxx, the Macy's, the Kohl's. Macy's was up 5%. Macy's doesn't do that all that often. Big day for Kohl's. Ross, big break of resistance. Nordstrom, Urban, just a lot of really good movement. Now, a lot of those, more brick and mortar type of stores don't have great looking charts necessarily from a bullish point of view. But, you have a Macy's running right up into resistance, that's, and that, goes against it. And hey, we saw a little bit of a turnaround, made a little bit of a higher high, of course, already at a higher low, and then already a higher high, major level of resistance. You have things like, Urban that maybe don't look all that great, but have powered through their 50-day moving average. That's not easy. Look how long they tried. All right, they've been trying for months to get back on the right side of that 50-day moving average. I think we got to give them a little credit for being able to do that. Then you have things like Kohl's, that took out, a resistance zone here today. This is what a lot of these companies are looking like within this sector. And what's interesting, and maybe this is more for going a little bit, into next week or, into the rest of the month, is some of these, we've seen some of the good looking ones, the Targets, the Starbucks, the McDonald's. There's a lot of good looking ones out there already, but some of these more bearish or neutral looking charts showing a little bit of strength. If they're running with the sector, there might be room even beyond, kind of the short-term room that I've been thinking as of late. Continues to be a really strong area, in my opinion, as we get working into earnings. Much like the NASDAQ, my biggest concern is we're pretty extended within this sector right now. Doesn't mean we have to pull back. It just means that we're pretty extended to the upside within the sector right now. Not a lot of resistance until 118 on the ETF, and so there's still room to run if we don't need a break. We don't need a break, but whenever we start to get this extended, flying again, far away from home, well above that 9 EMA, my brain automatically starts to think potentially a pullback could happen as early as tomorrow, and I need to be mentally prepared for it. Not that I'm calling that. I wouldn't bet against this sector at all right now. but we have had a heck of a run. And I think there's room, especially if we can get some of those, stocks that have been in those downward trends, those, retail, urban. I mean, how many times was, I don't know about you guys, but I had urban on my, bearish breakdown list forever, Macy's, Nordstrom's, a lot of those things were a good, cash flow type of bear plays for much of this year, at least. In a year where it's kind of been tough to find a lot of bearish candidates, they've kind of been a lot of the go-to for me. So if they can get on board and continue to see some upward movement, turn those downward trends around, boy, this could be an interesting area for a while if they're pulling their weight. Of course, Amazon's the biggest component of this ETF too. They make up a large percentage of the ETF, and they didn't do anything today. And so we saw that top to bottom big green candle on the strength of not just the Amazon. Sure, things like Home Depot helped, who's knocking on that 200 door in that nice profit-taking zone. I know they were in our reports. I know a lot of you guys follow them anyway. So they're in that decision-making zone. They're making it tough at that 200 mark. Nice move, good profits, but a ton of momentum. And so they're making it tough. Do you take the profits if you're in something that looks like this or not? I mean, this is a good problem to have. We want this problem. But that is kind of where we find so many things within this sector. Been very happy with its performance these last couple of weeks. Over in real estate, just another day dipping down into the 9 EMA and then bouncing up off of it. It's not been for swing traders, at least how I think about swing traders, not been a lot of great entry points. They've been kind of developing more on the intraday as it kind of works into that 9 EMA that's just basically been magic for it for whatever reason this last little while. Just another day. I mean, it's hard to really say anything clever or exciting about them. Little more selling, but again, more resilience. I mean, we haven't closed below the 9 EMA since our pullback began. And so why am I going to say it needs to happen tomorrow? It continues to act as kind of that intraday turning point day over day. At least that's how it's been performing. Again, you guys know these stocks, they're REITs, but so many of them are at all-time highs or constantly challenging all-time highs. Just continues to be a very strong area. Then you have our communication services, my least favorite sector, just from a who they are perspective, not from a necessarily trading perspective right now. I like them better than I like healthcare. Just again, so many stocks that in my head kind of belong in different places. Video game stocks didn't do so hot today. Take-Two was down, EA was down. Facebook holding its break. It's not been pretty, but it's been holding its break. Google kind of getting in on the action. So when you look at the ETF, I still think more bullish than bearish. I think you have to be there because the simple reality is my weird opinion notwithstanding, doesn't look a whole lot different than a tech, right? As far as making new, at least relatively new highs. Obviously, these guys have lots of highs that they're going to have to take out before we're hitting an all-time high, but trending nicely above everything, well above that 9. So still like tech overall, and I like thinking about this sector more as a component. I think video games, I think social media, I think Charter, AT&T, Verizon. I just have a hard time, as you guys all know, thinking about this as it all belongs together. And I know that that's probably just a me thing, but it is still there. It hasn't gone anywhere, if you were wondering. But a good solid day, another day above resistance here. We're working into a potential resistance zone in that $49 range. We still have some room to go before we get there. That's how crazy it is. I've not drawn any lines because we've never had to draw resistance lines on XLC before. So still some room to go. Not loving it as much as I like the other areas, but again, you have to like some more than others, right? That's just kind of how it tends to work. So good solid day for the most part. Some weakness in the video games though here today. All of a sudden the EA chart, you guys know me, I don't like those video game stocks at all. They've been way too volatile in my opinion lately. All of a sudden a little turnover, but I know a lot of people have, liked EA. There was a very clean break above 100 and we held above 100. Clearly pushing back down below that. Now, I don't know that that's a sell signal so much as just not very bullish, but a little bit of, a little bit more selling over there. Take-Two, Activision actually held up okay. Whoops, guess it helps if I add the O to that. Activision held up all right, but some pretty big weakness in take two, testing a support zone. Unlike EA that still has some, support lines or some moving averages in the form of the 50 to hold it up. These guys are kind of knocking on the door. Still a little skeptical of the sector as a whole, much like I have for very long now, thinking about it more on components or at least industry groups versus the sector as a whole. So that's where we find ourselves. Again, I think we're going into tomorrow and going into the weekend, preparing for next week. I think everything that we're seeing as of now is telling us to overall continue to be bullish. We are getting a little extended, and that is a little bit of concerning from a short-term perspective. I will keep that in mind going into tomorrow. And as far as, do I drag up stop losses? Do I scale out? Do I lock in some profits? I think that for me, again, I might be dead wrong, of course, but I think I'm probably going to be more on the side of locking in at least some profits, not closing out, but locking in some profits here tomorrow, especially if we see, any downward movement off of that jobs report. But for the most part, things are behaving like they should. A lot of strength still in this market, in my opinion. Over in the dollar, looks like the pullback crew is out there. We talked about it, certainly that I'm not one of them, but we, after, selling off of that, resistance zone yesterday, buyers came right back into it. Looks like they are at least thinking about taking another run at that resistance level. They're going to have to do it without me, of course. That break above resistance is a very good signal going into the future. That is what I'll continue to watch for. I'll cheer for anybody who is playing it bullish for that to happen, but it's still, I'm a spectator personally within the dollar. But you have to like the rebound. We definitely have to like the rebound. We'll see where this one takes us going into tomorrow. I think you just have to be concerned about this resistance zone. We have just way too much history, way too many times. It looked like, yeah, no problem, it's going to break that resistance. And then boom, not only did it fail, but it failed fairly spectacularly. Still think we have to tread with caution as we're dancing around this resistance zone because it has been very strong. It's always best, in my opinion, to respect resistance, assume it's not going to break, prepare for it to break, and assume it's not going to. Always my philosophy. Not a lot happening from a charting perspective in the metals, but a lot of volatility today, a lot of back and forth in the metals market. Gold really doesn't look much different from a pricing perspective today than it did yesterday, but we definitely saw some selling and some nice rally. If you just look at this off of, say, a 30-minute chart, just to illustrate the point, zoom and a free fall, and then zoom, basically a V-shaped recovery. There's volatility here. As you guys know, this chart is, in my mind, not a very good place to be as a directional trader right now. Add that volatility into it, and I think that even more so than I did, yesterday or the days before. So I'm continuing. This is just on a watch and a wait and see. 1280 still my line in the sand, and at least as of right now, it's still at 13.25. If we continue to dance around within this range for a while, maybe that can change, and it possibly could. But it's at least going to need another week dancing in this range for me to get to that point, I think. So not a lot has changed. Do you think we can look at this 13 as at least a little bit of resistance in the shorter term? We've now tested or approximately it basically for a week. We know that it was an old resistance level, an old breakout point. So while I don't think it's the 13 is a huge number, like maybe I did, when we were talking back here or talking about that break, I think we can respect it a little bit with the price action that we've seen develop as of late, and of course the history that we have there. Over in silver, very similar, volatile day, broke down again here, below that support level on the intraday, but again, a close is a close is a close, and at least according to me, nothing has changed here. Got to close below that before I start thinking bearish, and at least right now it continues to hold. We do break. We've been given out a little bit on the intraday, but again, it's how you finish, not how you start, in my opinion. Still a lot of overhead, lots of overhead. Falling 9, I'm going to look at that as a resistance catalyst potentially. 15.25, the 20-day moving average, 1550, the 50-day moving average, our high point here. If you're a bull on silver, you are much braver than I am. That is a lot of challenges, and maybe it beats them all. But I would be concerned about each and every one of them from a bullish perspective. On the other side of it, from a bearish perspective, I'd be probably more concerned because, well, that support has really been holding up. Until that's taken away, I can understand the bullish argument of buying off of that support. I'm not that guy, and I would not dare in any universe would that be my style, but I understand it. And I do understand that folks will buy at support. Just because I'm a giant coward doesn't mean other people won't buy at support. Speaking of support, we did see natural gas take out that little intraday support level that we saw here develop this week here today. And when it did, we really saw some selling. Looking at the hourly chart, I mean, that's kind of where it happened. We started selling, we took that out, we just kept selling and drifting to the downside, probably somewhat at least to be expected after giving out on that support level. We've watched this 9 EMA sliding down and constantly acting as a resistance zone for us. Still think you probably have to assume that most likely way that this is going to go is working back down in towards that support zone. But tomorrow is Friday. We do have the open. We all know natty gas can gap one way or the other on the open, even when it's not an insane gap. It is a gap, right? It tends to do that. So that can change that pattern very quickly. New trading wise, I can't see a great opportunity for a swing trade. I'm still not on board with the bearish opportunity from a swing trader. I get the technicals. I just don't believe in the risk to reward within this right now. I think you have to assume that 250 is a brick wall. Whether that's true or not, I think you have to assume that. You have to give it a little more room than I'd want to. But another day below that old resistance slash support zone, another day below all of the moving averages, that 9 continues to push us down. It's not taken a lot to get people to sell it, at least on an intraday level right now. Nothing tank worthy or anything, but certainly buyers are few and far between, at least these last few days within natural gas. And then over in crude, interesting and probably decision making time here. On crude, I would say we've had a nice run. I still feel that overall we're probably going to try to work back up into that 63.50 to 64 range, and those are my expectations going forward. But with a little bit of downward movement today, putting in a lower high and a lower low here today, that's kind of the first step of a potential retracement, and we are pretty extended, and we have moved a fair amount. A retracement would be normal, right? Just because I'm long crude doesn't mean I can ignore that reality, unfortunately. But at the same token, we could easily make the case that this 200-day moving average should act as a support catalyst. As long as we don't see significant selling in tomorrow, we should be seeing this 9 EMA working up to start to prop us up as well. And so a lot of times you will see that where you'll break one and it takes a little while for the other moving average, that 9 exponential moving average, to kind of catch up and force the issue. We saw it force the issue to the downside on natural gas. If this rises up while we continue to consolidate in this range, it can help force the issue to the upside as well. If you look at this on an intraday chart, we're kind of hanging right at support. So from my point of view, as long as we're kind of holding this, I'm going to call it 62, I'm okay. I think from a management perspective, I'd want to give it that. If that were to give out, we've broken down a little bit. We've made some lower highs and some lower lows. If that does in fact give away, there's not a lot to hold us up as far as support goes. If we're looking at this, because we had such a nice well-behaved run to the upside, there is a little bit of room to the downside before we start to get into some support zone. 60 is looking awful good. If we do pull back to 60, that could be a very interesting entry point if the chart looks nice once we get there. But there's some room between 62 and 60. So if that does give out, again, I don't know the future, but I would expect that it's not unrealistic that it does pull back a little deeper back in towards that 60 to 60, 50 trading range in through here. So I think we can look at this from a management point of view, depending on how we feel about things. I'm not much of a pullback sitter if I can help it. That doesn't mean I can't and won't have to help it, right? But if we see a little more downward movement, I could get the argument below today's low, taking the profits, resetting for next week. But quite honestly, I could get the argument that says, hey, listen, Frank, I get it, but there's a lot at 60. We still have the 200-day moving average. We have the rising 9. We have a lot to prop this up technically. If you're willing to sit through a little retracement, because it's not like it's guaranteed to get a retracement, we could easily just consolidate. Heck, we could break to the upside tomorrow, right? It's not like this is a foregone conclusion by any means. that argument, I could understand it as well. So I think there's a lot of ways that we can look at crude right now from a management perspective. That, that 60-minute chart makes a lot of sense to me. Below today's low makes a lot of sense. The 200-day moving average makes a lot of sense. The 9 EMA makes a lot of sense. The 60, 60, 50 range makes a lot of sense. So really, it probably comes down to how how much do you want to try to get that last last dollar, $1.50, $1.80, depending on where exactly you have resistance in that 64 range. Is it worth it to you? And that's, of course, something we'll have to decide for ourselves. Again, in the realm of problems, this is the one that we want to have, right? We want to have to debate, what do we do with these profits? Do we stay? Do we go? We can always scale out, right? There's nothing wrong with scaling out of the position, pulling up the stop below the 9 EMA or whatever we choose with the remaining portion of the position. Again, in the world of problems, this is exactly the one that we want to have. Keep an eye on that little short-term, approximately 62 support zone. Below that should be a little bit of room to sell until we start to work back into that 200-day moving average. That should be the first real line in the sand, in my opinion. Hopefully, we're a little bit mellow. If we do want to sell, I'd love to see this 9 work up and pushing towards that 200-day moving average early next week. So we're in an interesting spot on crude. A good, clear profit-taking spot. If you're of the school of thought that let's lock these things in, I would completely understand. On the other side, like I said, you could easily make the case. I mean, the trend's strong. There isn't any real resistance here, so why leave? So I could really, exactly, Thiago, exactly. So, I could really see the case either way, probably more so going to be on your personality type. And yeah, ultimately there will be a right answer one way or the other, and we'll know for sure when that happens, but we have to make that decision before it happens here, right? So we'll, hopefully that gives you some different ideas. I'm going to try to bring up ConocoPhillips, but for some reason it does not want to. I don't know if that's my internet thing or what that is. There we go. All right, so ConocoPhillips in a very interesting spot right now. That's a real interesting spot here, John, on ConocoPhillips, testing a pretty significant support zone. So, right now I think it's this is the battle line here around $65. This was a clear support zone for a little while before it tried to break to the upside, a support zone after it broke to the upside and failed. Nice movement. Big gap to the downside, but whatever, we're going to buy it anyway. That's terrifying to me, but that support working for you. So I think right now we're really looking at, was it Exxon? Okay, so we'll look at that too. Well, this is an interesting chart. This is a really interesting chart too. This 65 is a big line. Do buyers come off of that support level? I could get it. That breaks, that probably should be a little bit of a sell signal, and that was actually Exxon and not Conoco. So, well, not much different. This is going to be, for me, the exact same read as the energy sector. Very clear top here. And I hope I got the right guys here on XOP here. Very clear top, right? Trading within a longer term range. Let's throw a couple lines on here real quick. The top one is the one I'm going to be focusing on the most in the short term. But basically, yeah, so the exploration and production ETF, I see where you're at. So very similar to the broad energy sector ETF, I would say overall on the read side of things, a break, if we could get that break, and I'm still looking for it because we have seasonality working for us. If we can get it, I think that's, a nice signal with some seasonality. For me, it much like the energy sector as a whole, we need to come out of this range. And I guess you could argue that this is our range. We have a lot of history down here at 2960. I would actually argue with the two times that we tested 28 that this is our range. So for me, anytime I look at a chart like this, John, the first thing I'm going to immediately do is say, if this breaks this resistance, that would be a buy signal. If this breaks this support, that would be a sell signal. You could even argue this support zone here at 2960 being somewhere in the middle. If I'm looking, and I'm looking for it to break to the upside, but it has to do it before it does it, I guess, if that makes sense. So for me, much like the energy sector, if I were to break to the upside, I would probably really like this chart, or really honestly, any chart that looked like it. Definitely with the seasonality within the energy sector as a whole, that would be a feather in the cap of XOP here. If we were able to break through, I'm just going to need to see it before I believe it. But yeah, very nice and very clear top. Very, very clear top. I can understand the what you like about this chart. Pretty well behaved little ETF here on XOP. So hopefully it gives you some ideas. That is very pretty. You know, if we could break through that, you know, that's pretty. I might have to keep an eye on XOP. That might be a prettier break to the upside than the XLE if we get a break. And there's a good chance if we get a break in one, we get the break in the other, both being, you know, of course, these are more specifically E&P companies. There's a lot of E&P companies in that XLE too, right? So you betcha, John. All right, guys. Well, that will do the market recap for today. But as always, just another interesting day in the market. Things are behaving pretty normally. Some areas are getting a little extended, but then all of a sudden you see a clean break on the Dow Jones. If the Dow Jones closed right below that resistance today, I'd be thinking, yeah, tomorrow's profit-taking Friday. But with it breaking through that resistance, showing a lot of strength from a broad perspective. So going to make for some interesting decisions, hopefully some interesting trading opportunities going into next week as well. So that'll do the market recap for today. Old Snap. All right, you talked me into it. I can do one more. It doesn't take much to get me to go look at a chart. Very similar, just a little bit of a different type of scenario. I'm just going to steal this line over here to XOP, where we've actually established a pretty clear level of resistance after that nice gap to the upside on I can't remember what that was. It was post earnings, if I remember right. But we had that nice gap. We're now basically going sideways. We've got a clear top. We've got a clear bottom. Whenever I see anything that looks like this, I'm going to be thinking if we break to the upside, that is a bullish signal. Now, whether or not, you or I would individually call it a tradable signal, again, that will probably depend on you and I, but certainly a break above that resistance zone would, in my opinion, at least be a bullish signal. I'd want to see that happen because, hey, if we got in on when it pulled back, and that wasn't a very pretty pullback and probably would have been difficult to get into, at least according to my rules, it would have. I can't see how I would have got into it here, even though I should have. I would be thinking, yeah, this has got to break this resistance. Because again, think about kind of the thought process here. Whenever you see patterns like this, think of this kind of as a second chance, if you will. If we get into so we had the pullback develop, and again, it was kind of ugly in my mind, but it was interesting, that's just me. If I bought into this pullback within this upward trend, my expectations were probably that the trend's going to continue. So my first target or first level of resistance is going to be this swing high because, well, that's where we stopped going up before. But because of the strength of the trend, I don't think it's unreasonable for my expectations to be that that's going to be taken out. Now, since I didn't get in on the pullback and I'm not making that decision with profits, I'm making it with new money, I need to see it break that resistance to give me the signal that I'd be looking for, if that makes sense there. Hopefully that does. That's how you can always think about these pullbacks that you miss, when they take out that swing high, at least from a purely technical point of view, that is a little continuation break. That does give us potentially an opportunity if we want to take it to get into it. I know that Snap's the one that Matt hates, right? Matt hates Snap, and Tim loves Shop, I think. So there's other areas I think that I like a little bit better, but I can understand the logic if we take resistance out, because quite honestly, I'll always say that if we break resistance, it's a bullish signal. What exactly I would do about that versus anybody else, that can of course differ dramatically, but I'll always call something breaking resistance a bullish signal because, well, it's hard to break resistance, right? So, all right, guys. Well, thank you so much. You're very welcome. As always, guys, thanks for hanging out with me. It's always more fun to do this with you guys than on my own. Of course, we've got our cash flow club going on tonight for our pro members. So be sure to hop in, see what old Ty has to say about things. Always a good time in the cash flow club. If you're not a pro member, hey, why don't you head over to Tackle Trading and take that 15-day trial, see what it's all about. Maybe you'll have a good time. I know a lot of us certainly do. If you enjoy the market recap, it is helpful and appreciated if you give it a thumbs up. So thank you for that. And if you are new to the channel, go ahead and hit that subscribe button and hit that notification bell so you can be alerted to any of the videos that we got going on over here. Let's see, what did I miss? Oh, Twitter. I can't miss Twitter. You can always follow us over at Tackle Trading on Twitter. You can, of course, find me at FrankMartin23 on Twitter as well. If you're ever looking for me, don't be afraid to say hello. That was a lot. That was a lot to spit out and not in my usual order. So got confused. So, all right, guys. Well, thank you so much for joining me. Appreciate your time. As always, you guys have a fantastic Thursday afternoon. I'll see you same time and channel here tomorrow for the wrap up for the week. Thanks again, everybody, and good night.